There was a deluge of New Zealand economic data released yesterday morning, with March data for the housing market, March data for food prices, and February data for international travel and migration. The housing data for March showed somewhat mixed result. We saw some encouraging signs of a recovery in house sales. However, overall, the general level of activity remains very low. It was encouraging to see a 5% lift in housing demand, and this was led by a 10% increase in house sales in Auckland, seasonally adjusted. This suggests that underlying consumer sentiment may be increasing following the rate cut by the RBNZ in early March. Nonetheless, the level of sales do remain quite subdued, and furthermore, we do remain concerned about the level of disruption in Christchurch's housing market. Going forward, we expect that low interest rates will continue to provide support to the housing market. We expect that house prices have bottomed out around these levels, and we expect them to recover about 3% on a nationwide basis over the next year. The New Zealand dollar continued to lift overnight on the back of global upbeat sentiment. The New Zealand dollar briefly broke through the 79-cent marks against the US dollar. The New Zealand dollar also ground higher against the pound and the euro. In particular, the euro was weighed by weaker Eurozone industrial production data and political wrangling as Portugal has turned to the EU and the IMF for bailout. The euro had been well supported over the past month, particularly as markets had focused on an impending interest rate increase from the ECB. However, now this interest rate increase has been and gone, focus has then returned on to government debt problems in the Eurozone. US economic data out overnight was relatively upbeat. US retail sales increased for the 9th consecutive month, and the increase comes despite concerns that rising food and fuel prices would weigh on discretionary spending. In addition, the Fed's beige book was relatively upbeat. The Fed noted that the recovery in the US economy was becoming more widespread, and in particular noting a lift in retailing, business services, and freight-related activity. We continue to expect the Federal Reserve will continue with its asset purchase program over the next few months. However, the more upbeat economic data does suggest that the Federal Reserve may consider unwinding some of the stimulus later this year. This would then provide support to the US dollar and in turn help the NZ dollar weaken from current levels.